Q1FY26 earnings conference call of Shyam Metalics and Energy Limited, hosted by MUFG in time. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Pankaj Halalka, Head IR from Shyam Metalics. Thank you, and over to you, sir.
Thank you. Good afternoon to everyone, and thanks for connecting with us on our first con call of this financial year. On behalf of Shyam Metalics, I am delighted to welcome you all to this call, particularly our shareholders and our industry analysts. Thank you for taking the time out on this call to discuss our latest results and performance. Our results and detailed investor presentation has been uploaded on the exchanges as well as our website. I hope everyone had a chance to go through it. To discuss our results, we have with us our Chairman and Managing Director, Mr. Brij Bhushan Agarwal, and our Director of Finance, Mr. Deepak Agarwal. They will take you through our results and then we'll proceed to Q&A session. Before we proceed, a small disclaimer. This conference call may contain some forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. The actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is also given on the page 2 of the company's investor presentation. Now I would like to hand over the call to Bhushanji. Thank you, and over to you, sir.
Very good afternoon, everyone. Thank you for joining the call. FY25 has been a very volatile year for our company, a period well defined by strong operational achievement, resiliency, growth, and effective strategic execution. Despite a dynamic industry landscape, we remain focused on integration, diversification, and expanding our value-added portfolio. This approach enables us to deliver solid performance across all the business verticals. I am pleased to share that we have delivered a robust and resilient performance this quarter. Your company revenue growth has been close to 22% year-on-year, while the operating EBITDA rose to an impressive 19%. Volume growth was particularly notable with 32% year-on-year increase. This result reflects our continued emphasis on operational efficiency, rigorous cost management, and balanced product mix supported by growth contribution from value-added products. Our blast furnace and color-coated facilities commissioned in FY25 have performed strongly this quarter with operational stabilization achieved ahead of schedule. In Q1 FY26, the pig iron plant recorded a utilization rate of 104%, while color-coated unit reached close to 70%, indicating a healthy ramp-up and positive momentum. This reflects not just operational excellence, but also our ability to execute projects ahead of expectation, showcasing strong ramp-up capabilities and performance-driven culture. We believe our core strength lies in driving efficiencies, though both vertical and horizontal integration. This strategy enhances profitability, broadens our customer base, and helps mitigate margin volatility. Our continued focus on backward integration is expected to further improve operational performance and increase the revenue share from the finished good. Our production capabilities remain strong, underscoring our commitment to operational excellence and ongoing investment in the most modern advanced technology. Through upgradation, modernization, and process enhancement, we have expanded both our capacity and product quality and gone more and more value added to enhance the profitability and the bottom line. The aluminium segment continues to demonstrate a very solid performance, and we are confident in expanding our presence in this space. By developing the niche product for special applications, we aim to drive growth in both volume and profitability in the coming quarter. At Shyam Metalics, we remain firmly committed to executing our growth and roadmap. As Q1FY26, we have incurred up to 7,003 crores in the capital expenditure, representing 70% of our total planned capex. Of this, close to 4,900 crores has been capitalized. Our announced investments are progressing well, and we anticipate timely completion. As stated during our call, most of our carbon steel capex is expected to become operational by FY26, with the stainless steel and aluminium projects on track for commissioning in the year FY27. These investments are fully aligned with our long-term vision, strategy, and focus on deeper integration and improved efficiency and sustainability. We expect them to be earning accretive with a contribute meaningful in the terms of revenue profitability from 2728 onwards. In conclusion, we are proud of how our team continues to deliver in the challenging environment while staying focused on the long-term values and commitments. By consistently executing strategic projects and optimizing efficiency, we are well in position to maintain our annual CAGR of close to 15%. Thank you for your continued support and trust. We look forward to engage with you in the upcoming quarter. With this, I conclude my speech, and I would request our CFO and Director, Mr. Deepak Agarwal, to take us through the financial performance. Thank you so much. Deepak, up to you.
Thank you, sir. A very good afternoon to all the participants. I thank all of you for taking time out of this call to discuss the results for the first quarter of the current financial year ended 2026. I will be glad to share a quick review of the reported consolidated financial for the first quarter and the review for the financial year 2025-26. I am elated to share that in spite of ongoing geopolitical crisis and the US President Donald Trump induced tariff uncertainty, which has negatively impacted the current market scenario, Shyam, being the exceptional market player as always, has not only restrained its existing moment of growth, and the result reinforce our trust in our strong business model, which continues to generate healthy cash flow. We expect with a reasonable strong demand recovery on the back of recent policy announcement made by the government towards railway, roadways, civil aviation, gas pipeline, towards affordable housing, and the incremental budgetary allocation to this sector is likely to drive the demand for both long steel and as well as in stainless steel. I would now like to draw your attention to the financial of the company on a consolidated basis. In the first quarter of the current financial year, on a consolidated basis, the company reported an operating revenue of 4,490 crores, a growth of 22.4% over quarter one of the last financial year. The sales mix constitute a high percentage of volume from finished steel, which accounts for a 76% of the total revenue. Over the past quarter, the price of product across steel have been subdued except for aluminium foil. The margin have remained at par on the back of reductions in raw material prices for our consumption. The company has been able to book an operating EBITDA of 580 crore, sustainability increased by 18.98% over a quarter one of the last financial year, and operating EBITDA margin in quarter one of the current financial year was 13.12. This margin mainly increased over the previous quarter is on the back of our performance of a newly introduced product, pig iron and color coated steel. Our profit after tax for the quarter stand at rupees 291 crore, which has seen an increase of 5.3% year-on-year. The PAT margin in the quarter is 6.6%, which is quite sound considering the current market trend and peer comparison. At Shyam Metalics, we always follow disciplined capital allocation policy. Under this policy, we remain invested 70% of our cash generated back into the business, retain 20% as a liquidity surplus, and the return 10% to our esteemed shareholders on account of dividend. Our ambitious capex plans have been laid out in the investors' presentations, and we are well tracked to execute them as per the expected timeline. We have around 5,599 crore capex pending at capitalization, and out of which we have spent 2,114 crore. In this quarter, we spent 419 crore, and the remaining 3,485 crore shall be spent over the next 2 years from our internal accrual and from cash generated from our operations. As mentioned by our CMD sir earlier, the company has declared an interim dividend of 1.8 rupees per share, amounting to an outgo of rupees 52.24 crore, which is pursuant to our disciplined capital allocation policy. We now have a consistent track record of declaring dividend since our listing in June 2021. We look forward with the optimizations as we progress on our growth journey, and we are confident of achieving robust performance and financial performance going ahead. Now I conclude my portion of speech through the floor open for the question and answer session. Thank you. Thank you to all investors.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Goldman Sachs. Please go ahead, sir.
Yeah, hi, good evening, everyone, and congratulations for a good set of numbers. Couple of questions.
Sorry to interrupt, sir. So your voice is not audible. Can you please use a handset, or you can be more
louder? No, handset. Is it better now?
No, sir.
Yeah, you're audible. Yeah, please carry on.
Okay, wait for it. So, couple of questions from my side. The first one is regarding the couple of two resolutions, fundraising resolutions, amounting to 7,500 odd crores. Now the company is reasonably, cash rich, and our pending capex is hardly 3,500 crores. Just wanted to understand the genesis of these. Are these merely enabling resolutions at this point in time, or you have certain targets in mind for spending this money?
As far as the fundraising resolution, this is basically enabling resolutions. Earlier, we are enabling the resolutions of 3,600 crore, which was expired because the resolution is valid for 1 year. This time, because in this board meeting, we are also fixing our annual general meeting, and subject to the approval of SEBA, we are just going to enable our resolution as far as fundraising to the extent of 4,500 crore on account of various issues like QIP, trades, preferentials, and any type of issues. That's it.
So there is another 3,000 crores through debt actually. So, and this amounts to 7,500 crores. So wanted to understand that, if
This is also an enabling. As you all aware that the Shyam Metalics is always in the capex mode. And whatever we have announced our capex of 10,000 crore, out of this 10,000 crore, we have already incurred 7,000 crore, and balance 3,000 crore will be incurred maybe in the next 2 years. And we will definitely another round of capex plan is on the table. Our capex committee is working, evaluating, and going forward. As and when it is required, we are just enabling the resolutions as far as NCD or any type of trade instrument. If it's required, then we can able to go ahead. Otherwise, it is just like an enabling.
No, sure. Thanks. Understood. The second question is essentially that I find a new product that is HR pipe. Now this product I'm seeing for the first time in our presentation also. So just wanted to understand whether it is an intermediate product that you are testing the market with, and later on we would have some broadened commerciality of this, or is it something that we are trying to get into, let us say ERW pipe segment or something. So just wanted a little bit more color on this and about future plans with respect to this HR pipe product.
Amit, right now we just commissioned the PR plant. HR is just a byproduct. Presently, we don't have any such plan to go into a pipe business. These are the off-cut which generally generates when you buy the big HR coil. You have to maximize the value of the byproduct. This is just a byproduct, nothing on the primary side. Thank you.
Okay, understood. Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Shalin Kumar from UBS Securities India. Please go ahead.
Yeah, hi. Good evening, everyone. Am I audible and clear?
Yes, very much audible.
Yeah. Congratulations, Bhushanji. Congratulations, Deepakji. Pretty good solid number in the environment. So just want to understand a few things here. So I believe a part of this strong performance is coming from our new units for pig iron and color-coated sheet. So have we captured the benefit completely in a quarter, or there can be more to come in an incremental quarter? I mean, like, were they completely utilized, their units, or there is still some scope to build in from existing capacity?
Presently, you can say there's not much more head-on on this unit.
Sure.
Presently, because I think more or less it is capitalized.
Mm-hmm.
And today, I'm very happy to say that, we are operating the pig iron facility at more than 120% rating presently.
Wow.
And this is something, none of the company in India is operating the capacity of the pig iron and this capacity. Our fuel consumption is also very, very, very well in comparison with our peers. We have taken the best technologies and we have done a lot of R&D in setting up this plant. And I'm pretty happy to see this. And in the time to come, yes, there will be a lot of other improvement, but it will take little time because now we are in the monsoon time. And this is the first monsoon we'll be facing with our new setup. So maybe in next 6 months, the much more better picture, larger picture will be on the table, yeah.
No, great. So if I just ask like a basic question, what's leading to such a high occupancy, such a high utilization, right? Are you need to produce at a lower cost, strong demand? What's driving this utilization?
If you see, generally the blast furnace is operating at 3.5 rate. I will just give you an example. Today we have set up a 600 cubic meter blast furnace.
Mm-hmm.
And for a 600 cubic meter blast furnace, the optimum capacity what is guaranteed generally is close to 2,100 ton. But constantly we are producing 2,700 ton today, which is close to 4.5 rating. Generally the size vis-a-vis the capacity, the run rate is 4.5 in comparison with 3.5. And we expect that we should be able to go to 3,000 tons or maybe little less than 3,000 tons. Since this is a monsoon time, we don't want to take a lot of, new challenges because it's the first monsoon and generally the teething issues are always on the front of, the moisture and other concerns are there. But we are pretty sure we'll be able to touch it to close to 2,900 tons.
Got it, sir. And also, just want to understand the status of our captive power unit.
Sorry to interrupt, sir. Your voice is cracking.
Am I audible?
Yes, sir. You're audible now.
Sorry, sir. I'm network area. Sir, just want to understand the status of a new captive power plant. What's the current position on that?
We have commissioned the first 90 megawatt of Odisha, and the second 90 megawatt of Bengal plant is under the final stage of commissioning. We expect that by end of August or early September we should be able to commission that as well.
So if you can help us, what kind of benefit will come on a quarterly or annually basis on the both units of full operation, just because for estimate if we can.
So most of our power plants are based on the fuel is rejects and waste heat gases and all. So our cost of generation is close to 2.5 rupees a kWh.
Okay.
So it is definitely going to enhance the bottom line because the cost is going to be more competitive.
Absolutely.
Whatever some percentage of import we are taking from the grid, we will be able to reduce it. And we expect that this will be also enhancing our bottom line and will help us to be more cost effective.
Got it, sir. One question, this last question, and then I can come back to the queue. I didn't get a chance to ask this question earlier also.
Sir, sorry to interrupt, sir. Sir, your voice is cracking.
Again, sir. Okay. I'll join back the queue then. It's okay.
Thank you. The next question is from the line of Preeti Agarwal from SK Associates. Please go ahead.
Hello. So the stainless steel wire segment has entry barriers due to customer approval timelines. Have you cleared any approvals in Q1 and which export markets are being targeted? Also, you mentioned 7,000 to 12,000 tons of EBITDA in wire division and even rupees 30,000 per ton in select products. So what proportion of your output in FY26 is expected in these higher margin SKUs?
Stainless steel wire, we just commissioned the plant, and presently we are operating at close to 30-35%. We are overcoming all the challenges of the stability, and we also have started the export market, started exporting the material. So this year,
one more thing, as far as pricing, we will not consider only the pricing. If you see in our track record, we will be always a volume growth. Whatever be the EBITDA we are generating, we are adding our capacity and we are generating more EBITDA from adding our product.
Okay. And another question that I had was on the fundraise part. So can we assume that this 7,500 crores of enabling resolution, will it be fully utilized for the capex plan?
As of now, there is no such plan for utilization of this fundraising. We are just enabling the resolution subject to the approval of the shareholder. As and when, if it is required, then definitely we will achieve. But as of now, there is no plan for any fundraising or something. This is just like an enabling.
Okay. Thank you. That's all from my side.
Thank you. A reminder to the participants, you may press star and 1 to ask a question. The next question is from the line of Devesh Lakhotia from Ikigai Asset Manager. Please go ahead.
Hi sir. Thanks for the opportunity. So couple of questions. One is on the aluminum segment. The ADD also I think was approved in terms of foils in the past couple of months ago. So are we seeing any improvement over there? Because at least in terms of margins and volumes, it's not reflected as of now. And the second one is just wanted your thoughts in terms of the entry into wagons that we have announced with a 300 crore capex. Just rationale and the opportunity you are seeing there. So those two.
See, definitely there is a good spurt in the demand in the aluminum foil, and the margins are definitely improving. But people are carrying over with their own inventory on the sales side as well as on the buy side. Generally, all these things take some transition phase are there in the level of 3-4 months. We'll start seeing more and more better numbers in the time to come. And when we are talking from the wagon point of view, it's a very small unit, on the size of our company. And since we had a railway siding, we had complete infrastructure, and with such a low capex, also enable us to utilize our stainless steel plates which are going to be manufactured in our plant. So basically, it is more a strategy side, and we will be able to enhance more value. Like one of the company only in the country which has the capability to produce from ore to metal. So this is basically a concept where we are seeing that lot of stainless steel wagons are being introduced by the government, and we are coming up with a flat product in the stainless steel. So we expect that it will help us to create more value for the organization and our shareholder by this forward integration. Thank you so much.
Thank you.
Thank you. The next question is from the line of Kunal Devendra Kothari from Nuvama Wealth Management. Please go ahead.
Hi. Good evening, sir. Many congratulations for a great set of numbers. Sir, few questions from my, this is on regard to our key projects. So is it possible to share what are the key projects which are going to be executed in this? And question is, are we looking at any other sector also to enter into it? Because earlier we were looking to enter into DI pipe mill, but we have not seen any capex going on over there. So that any thought on that? And on top of it now, because by year end we are going to end up with all the projects which is ongoing. So do we have something in mind now, because our company is on a bigger shape? Instead of doing small projects which we have been successfully doing it, do we which can change the orbit of the company? Thank you.
First of all, I must tell you, the diversification what Shyam Metalics is doing is not a commodity diversification. If you see the kind of business what we have created in the aluminium sector and going for the expansion in aluminium, we are more than doubling the foil capacity and also going backward integration, putting up a downstream value-added product which is 100% substitute like fins and other critical aluminium component which is used in the automotive as well as in the railways and other sectors. So we are not working in this small orbit. We are working more on the qualitative and more niche product with the high return and more sustainable business. So we expect that this aluminium business in next couple of years should at least grow by more than 250% what we are doing today. So first of all, what we are doing, we start with a very, very small pilot model. We learn and then we expand. Even in stainless steel, our orbit is very decent. We started with close to around 1,200-1,500 crores top line in the first year, and now we are targeting of more than 5,500-6,000 crores in next 2 to 3 years. We learn the business and then we make a model and we make sure that all our business yield should have a decent IRR and ROI return. Related to your ductile business, yes, at present it is a very small capex for us. We have put this project on hold for some time because we are seeing some kind of a challenge coming up in the businesses in respect to ductile. First of all, some changes are there on the OPVC side where we are seeing that -400 is replacing. And apart from that, we are also seeing that very big expansion is coming up in ductile. So we are just evaluating again. I know we have not invested because these things we had been evaluating for more than 6 to 9 months. And now we have decided that we will keep this project on hold, and it is a very small capex in the terms of the overall size of the capex what we have decided. And any other questions?
Yeah, I was looking at, sir, any other sector we are looking to enter, the way we have gone to wagons, and what are the key projects which are going to be executed in FY26?
Yeah. This year we are, the flat product, this color-coated business and HR and all what we are doing right now, we are doubling. So from close to 200,000 tons approximately what we should be able to do this year, we are ramping up to close to 4.5 to 500,000 tons. So by end of this year, we'll be commissioning this project. And we are also, ramping up the stainless steel long product and the wired business what we are planning to stabilize. We'll see some effect in this size also. And we are also increasing some capacity in the existing manufacturing facilities by little modifications, and some power plant has to be commissioned this year, So this is also one of the subjects which is going to be there this year. Yeah.
Thank you. And lastly, yeah, please, sir, go ahead.
Yeah, in addition to that, as far as key projects which will be commissioned in coming year, I would like to light on this that this year 25-26, majorly the carbon steel project will be commissioned. The growth which will be happen in the stainless steel and aluminum, the project of aluminum and stainless steel will be commissioned in the year 26-27. Majorly the major revenue will come up at the end of the year 26-27.
And sir, lastly, that same thing, any other sector we are looking to enter?
Not yet. We are looking for a lot of things, but nothing has been decided.
Okay. And about mining also, we are looking at the iron ore or coal side also?
Not really. We have been allocated as iron ore mines in Maharashtra. And we are opportunists. We are looking for some coal mining opportunities. So once we see that, because coal is available in plenty, there's no problem of the coal availability and the coal prices. I don't see the time to come. But if we see something good on the mining side, which has a lot of lucrative advantage of logistic and quality, and help us to more create an optimization on our operating efficiency, we might. But these are all the opportunities and nothing very concrete.
Understood. And sir, lastly, obviously this is not for a short term. If somebody has to look for next 5 years, after this expansion gets over, can we expect something big coming in from us so that we can maximize our balance sheet also?
That we will give. That we are thinking on the board right now, and maybe we come with a Diwali dhamaka at the time of Diwali. We are working on it. Actually, you have to appreciate one thing. The only company in the metal sector which is kind of a debt-free, which doesn't have any interest carrying forward, which has a CAGR of more than 20-25% year-on-year basis. In last 3.5 years, from the revenue of 6,000 crores, we have touched close to 15,500 crores in 3 years. So whatever we had promised, I don't know about 100%, but yes, more than 90% we have delivered. You see the cost of capex, what we have, shared in our projection. You see what is the completion project. So we are extremely careful, and we are concerned on our returns and the value of our shareholders.
That's very true, sir. That's very true, and all the best for your future, sir. Thank you so much.
Thank you. The next question is from the line of Varun Mishra from SK Ventures. Please go ahead.
So congratulations on a good set of numbers and opportunities, sir. I had a couple of questions from my end, starting from the color-coated roofing sheet, which we have it. So what has been the utilization trend as of Q1, sir? If you could just tell in.
See the color coating. Yeah, Deepak.
Yeah, we are utilizing the quarter one is 68% something.
or let's say so 60%? And like, how could we see that throughout the year, the utilization improving at what rate by the end of like FY26? How can we like, what can we expect?
I'll just brief you on this. The color capacity utilization, we have some bottleneck, like we are putting up a gal volume line number 2. And the present gal volume line, whatever we are utilizing, we are utilizing 100%. But the color coated capacity is 200%. So, we are expecting to commission the color gal volume line by end of this year. And after that, we'll be able to double the color business also. So these are under the expansion plan as per the business. Like we are developing the market, everything is becoming, set. It's a branded market where you need to also control the supply, to control the price, and also it is under the process.
Alright, so and like the blast furnace which is at Jamuria, which has hit 100% capacity, sir. So like, can you provide like as per the sales tonnage and the outlook for FY26?
We will be able to produce at 120%, like the capacity of the blast furnace, what we have installed, and I'm sharing, like we'll be able to do close to 800,000 tons this year.
Okay, so and so anything like any guidance for further, anything like you could add in?
Nothing, just keep on watching your company. That's all, and pray God that you all have to do well.
That's it. So I had one more question, just a moment. So this is laminated aluminium films for the AC cooling. The thing which we use. So like it is a 100% import segment. So have we received any like trial orders or any OEMs for that? Have we signed it?
No. We don't need to. We are in the process of setting up the plant. Once your plant is set up, then you have to apply for the qualification. But you don't have to look back because we have tied up with the world best technology supplier, and we don't have to worry. You are seeing all our units. Whatever we set up, we never compromise on the technology side.
All right, sir. That's all from my end, sir. All the best for the future. Thank you.
Thank you. The next question is from the line of Rakesh Roy from Boring AMC. Please go ahead.
Hi, sir. So my first question regarding, sir, do you see we are in bottom out for pricing pressure and we see any price improvement from second half?
Your question is not clear, Mr. Roy. Sorry. Can you please repeat it?
Sir, are we seeing any bottom out of pricing pressure which we are facing currently, and do you see any pricing improvement from H2, from second half of this financial year?
Sorry to interrupt, sir. Sorry, voice is...
No, I'll give the answer. We never see any pressure. We see always an opportunity in the pressure. So everything is going on fine, the result, and God willingly, everything will go right. There's no pressure.
Okay. Right, sir. Sir, again, sir, so margin funds for FY26, how much are you looking for?
Sorry?
For margin for FY26, how much we are expecting, sir, for FY26?
As far as margin,
we can't say all these things because, how the geopolitical situation, we have to see in the worst of the time also. We are working between 11, 12, 13% EBITDA. So I think the days, I don't see anything will go further down. We expect that we should be able to do decent. And it's very difficult to project anything on the margin side, but yes, I don't see anything on the downside, hence for this year.
Okay, so we expect for 30% margin will sustain for FY26.
30% margin.
13, sir. 13. Yeah, 13.
One. Sorry.
Yeah.
Yes. Okay. So thank you, sir.
You investors put a lot of pressure on margins and all. People are never happy. People are never happy.
Thank you. The next question is from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity, sir. Very good set of numbers. I want some data points. So what was our capacity mix between CPP and WHRB currently, and post our expansion, where would it be in terms of megawatt?
As far as mix of captive power plant and outsourcing power, we are always 82% our captive sourcing, and we are sourcing power from outside is around 20 to 25%.
Sir, no, I was not asking about outside. In captive, thermal power and... Yes,
actually, so to understand, in our company power model, we are hardly using coal. We are majorly using washery rejects and the byproduct of the washery and the other plant.
Okay.
And major portion of the fuel, is also the middling and the rejects what we generate from the washery.
Understood.
So the unique thing in our business is, all our power plants are set up where we are using more than 70 to 80% of the byproduct, and 20% is the fuel in the terms of low-grade coal, what is used to sustain the heat rate in the boiler. And other power comes from the waste heat recovery from the kiln. At this point of time, it is very difficult for me because, but to say how much we are going to generate from the gas to the fuel, because fuel is also a byproduct. But you are seeing the prices are so competitive where we are generating power. The price at what we are generating power, it's less than 2.5 rupees a unit.
Correct.
So, on an average, you can say maybe 30-35% or 40% must be wasted, but I'm not 100% sure. I have to check because every day we are commissioning some plants and all. What is the data?
Sir, I would like the capacity, sir. The utilization is different. I get what you're saying, but I would like the capacity, in our current 467 megawatt, how much would be from waste heat and how much would be from thermal power plant?
The waste heat recovery should be close to 35 to 40%.
Okay.
Yeah.
Sir. Sir,
and post the expansion, it should reverse. So today it's 60-40. It will reverse to around either 50-50 or 40-60. So we'll be having a higher WHRB post the 90 megawatt implementation.
Sure, sir. Understood. And just one last question. Our capex for stainless steel and aluminium, what timelines are we expecting the plants to get commissioned by?
End of 27 years.
Okay. Sure, sir. Thank you, sir. Very good numbers. Congrats once again.
Thank you.
Thank you. The next question is from the line of Gaurav Gandhi from Glorytail Capital Management. Please go ahead.
Thanks for the opportunity and congratulations on great set of numbers, sir. Sir, these days there are a lot of talks about large ship vessels manufacturing in India. So whether this shipgrade steel is manufactured in India or not, and how are you looking at this opportunity?
Honestly speaking, we have not evaluated this. So I cannot comment anything on this. Okay. So these are very different grades. These are all basically the carbon steel plates, where we are not in the process of present manufacturing, but in the time to come, once we have any new business plans, we will be able to share that. But presently, no.
Okay. All right, sir. Thank you.
Ladies and gentlemen, this was the last question, and I now hand the conference over to Mr. Omkar Bagwe from MUFG in Time for closing comments.
Yes. Thank you for joining us on call today. I would like to thank the management for sparing the time and answering all the queries today. We are MUFG in Time, Investor Relation Advisors to Shyam Metalics and Energy Limited. For any queries, please feel to reach out to us.
Thank you. Thank you to everyone.
Thank you. On behalf of Shyam Metalics and Energy Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.